Hi, hello everyone. I think, well, Chenge, you're already here. I mean, we have been together behind the scenes just before going live for quite a bit now. But I take it the technical team behind the scenes that's actually helping us with this streaming is just letting me know that we're actually live now on our Facebook page. We are actually streaming this on our Teams platform, but the rest of the viewers will be joining us on Facebook. So we're glad to have those of you that have managed to join us now. Before I introduce our guest for today, I'd just like to announce the winners of our social media challenge that we had posted earlier. And we've got winners from the Twitter platform and those that participated on Facebook. I do realize that I've got Lionel underscore YDE that's winning again. So congratulations to you, Lionel. I know you had won before on the Twitter platform and I see your name's appearing again. So you are due to get Old Mutual branded material coming your way. So please do get in touch with our team. I'm sure you're already familiar with the process. Then I also have Rashida Tinotenda and Simbarashe Machezera on the Facebook platform. The two of you also, please do get in touch with our marketing team to get your prizes. So we are back now with our On the Money program where we discuss money matters with you. And with me today, I've got Chengetai. Chengetai, who is a fund manager within the Old Mutual Investments Group and is responsible for equities investments. Now, what I found interesting about Chenge is that he's got a background in mathematics, which I too have. But I can assure you, our viewers, that we shall not be discussing anything to do with partial differential equations or Fourier transforms. We'll just keep it on the money matters. He's laughing because he understands the difficulties of these things. But the money matters, I think, are fairly simpler. He also holds an MBA from the University of Zimbabwe, among other qualifications, and has over 12 years of experience in the asset management industry. So he's the gentleman that we're going to be grilling today. Well, maybe not much of a grill, but we just need to discuss a few issues to do with the equities market, which I'm sure a lot of you would be interested in knowing about. So, Chenge, we're very happy to have you today on this show. This live chat. It's a pleasure having you before. It's not the first time we've had someone from Old Mutual Investment Group, and it's good to see the whole team coming forward to explain to us or to everyone else what your department really is about. So I'll just give you a moment now to just introduce yourself. I know I've just given a brief bio of your academic and maybe your professional achievements, but if you were to introduce yourself, you know, to someone that you want to befriend and not necessarily job from, how would you do that?
Thank you very much, Patrick, and thank you to the viewers for watching this discussion that we're going to have today, mainly focusing on equity investments. So my name, like what Patrick has said, my name is Chengetai Zvobgo, and I've been in the asset management industry since 2006, 2007, where I was with two other asset managers before I joined Old Mutual. So during that time, I was very fortunate to be exposed to all the areas of asset management industry, be it back office staff, unit trust pricing, research, portfolio management, and so on. But what I found quite interesting, the thing that bothered me the most, is that I got to know about equity investments at a very late stage. So it is my desire that as a result of this discussion, we are able to maybe inspire one or two people to look at equity. So much about my background in terms of my experience and what I've done in the asset management industry. You have already talked about my academic qualifications. So maybe in short, I can say that's who Chengetai is. You know, this is one of those questions where you 100% know the answer, but you are not quite sure whether you have responded to the satisfaction of the person who is listening. But so in short, that's Chengetai for you, Patrick.
Thank you so much, Chenge. I mean, you have responded quite well. Now, let me just hasten to say that I can see and hear you in real time, but I'm being told that the viewers on our Facebook platform are not able to do so. We appear to have frozen. I'm not sure what could be going on. So if I could just get confirmation from the guys that are assisting us if we're streaming live enough, and if people are able to hear us in real time, because I'm actually having a look too on my Facebook, and we seem to have frozen on that platform. Is there anyone that could just confirm for us? Lest we start going on and no one is able to get a hold of what we're saying.
What I found quite interesting, the thing that bothered me the most is that
is there anyone that could just confirm for us? Okay, I think the problem is on my side. My picture seems to have frozen. I'm not sure how we can do this now, Chenge. Are you able to see me though? Am I frozen on your end as well?
yes, as I was speaking, you were frozen, but now you are live.
Okay, that's good. Maybe we could go ahead. Okay, I'm seeing the comments now. They can hear us, but my picture is still frozen. My apologies for that. I'm not sure what's going on, but my Wi-Fi seems to be pretty stable. But not to waste the viewers' time, Cheng, I think we can probably just go straight into the conversation that we had planned for today. And given that we are discussing the equities market, I mean, maybe the first thing that you could just explain to us and the viewers is, why is it important in the first place? Or why is it that the stock market exists? What's its importance?
So the key or the main importance of the stock market is to raise funds, to raise capital. So you also want to raise funds and give your shareholders or your equity holders an exit route should they decide not to be part of your company. Because what really happens, Patrick, is if you have a small company, probably that does some printing and some printing work, and you want to buy more photocopiers and more printers, but you realize you don't have enough money, you have two options of going about it. One of the ways is to go to the bank to borrow some money, and in financial terms they call it debt. And the other way would be to look for partners to say, guys, I need to expand this business. Let's pull our resources together, and we become part owners of this bigger company. And when you raise your money through that way, you give your partners shares in the company, or what in financial terms they would call equity. Now, without listing, it means that your partners will be stuck with you for a very long time, because it will be very difficult for them to dispose of their shares should they want to do so. So the stock market creates that environment where those people who have given you funds in exchange for equity are able to now exit, and the market is able to create or come up with a price, a fair value price for you to exit that market. So you have shareholders coming in, shareholders coming out, depending on what will be happening within that company. So the main reason for listing is basically to raise funds.
I think that's great. Now you spoke about listing, and you spoke about companies that probably a guy starts a company and he wants to do photocopying and is looking for investors. And now what I'd probably like you to touch on slightly is the difference between these two types of companies that we normally see. If one is to approach the ZSE and look at the companies listed on the ZSE, it will probably just be the name of the company, for example, EFG Limited or XYZ Limited, but then the companies that most entrepreneurs will tend to register have got private limited at the end. Would you just care to explain the difference between these two types of companies?
Oh yeah, so this speaks just to the ownership structure. A private limited company is private, as the name suggests. So it speaks to the number of shareholders that you have, or the ownership structure where you are raising, you are registering a company as friends, as a family, as people who work together, or something like that. You register a private company. But when it comes to a limited company, it's now a company that has gone public, that is now open to scrutiny by the public. All your transactions, when you are doing your transactions as a limited company, they are open to everyone. So the main difference between a private limited and a limited company is just in the ownership structure. But just to simplify things, a private company is private, and a limited company is public and listed on an exchange. I think that's the simplest difference that we can find without going into the technical differences of those two terms.
Okay, thanks a lot. I think that really does simplify it. A private limited company is private, and the other one is public. Okay, now, if we were to get into, the real talk about how one can invest on the stock market, I'd just like you to tell us a little bit more about how one can actually get to start investing in the stock market. But I'd want you to focus a bit more on the types of individuals that can get to invest, dwelling specifically on maybe their risk tolerance or their stage in life. You'll find that the way a 25-year-old perhaps would invest on the stock market is different from the way a 60-year-old would invest in the stock market. So a young person has probably got more room for error. So when you look at these different investors, what could you say about them? The younger investors, the older investors, those that have got less risk tolerance and those that have got higher risk tolerance. What kind of advice would you be giving to these different kind of people?
So when you are going to invest, what you are looking for is a return. And in getting that return, you also open yourself to risk. This is not just unique to markets. Everywhere else, if you are in the rural areas where we grew up, we would go around hunting. If you hunt during daylight and in areas close to homes, yes, you get something, but what you get is probably small. You get your tsuro and your squirrels and so on. But if you want to get the real meat, if you want to get a good hunting exercise, people go out at night where they get the bigger animals. But in getting those bigger animals, they are also opening themselves to attacks by other wild animals like lions and so on. So that is the same thing with investing. What you are searching for is a return, but in getting that return, there is a risk that you have opened yourself to. So for a 25-year-old and a 60-year-old, like you have said, what you now need to do is go to the stock exchange. There are about 53, 55 counters that are listed there. These companies have different risks to them because of the sectors that they are invested in, because of the management, because of all lots of things. So what you want to do is to create a portfolio. And when we talk about a portfolio, we're looking at a collection of your stocks that you have put in your pot. So in creating that portfolio, you create different portfolios with different risk profiles, depending on your age, how much time you have for that portfolio to start giving you the good returns, and so on. So it's basically like someone who is creating a football team. You want a good number of defenders, a good number of strikers, a good number of midfielders, and so on. So by defenders, you're looking at those companies that may not be, that will have a solid base and so on, good fundamentals and so on, but may not be giving you the quick returns that you are looking for. And in terms of your strikers, probably you are looking at companies that have very good returns, but have some risks to them in getting that kind of a return. So at any age, you may need the advice of a financial advisor to tell you how you can go about creating your portfolio because of the age, the risk tolerance, and things like that. So that is really the main reason. That is why we have so many counters on the portfolio, and that is why you need the advice of a financial advisor, a stockbroker, an asset manager to help you pick the right stocks that fit your risk profile.
Okay, I think that's a really good response. Maybe what I just want to know now is to say, you've spoken about the risk profile of the individuals that can invest and the reason why we need to diversify the portfolios and the different structures that then come up. But you'll also find that when we're speaking about investment, there are different platforms on which one can invest. We've got property markets, and we've also just got the money market as well. Now, apart from there being differences in terms of the instruments that are used to invest on these different markets, why should one really consider the equities market in the first place? I mean, when you just look at now the comparison between the returns on these different markets, why is the equities market a favorable investment option?
So the beauty about the equities market is in terms of liquidity. Yes, you have your money market. Money market is probably the most liquid of all the investments, but in terms of the returns, it gives you lower returns. In terms of risk, it has lower risk. Then from your interest-bearing investments, we move on to the property. The property will give you higher returns, like higher returns than the money market. But in terms of risk, they're also increasing your risk. Then after that, you have now the equities. Equities is higher than your property in terms of returns and risk. Then the last one, the riskiest of all the markets would be your private equity. Good returns, but of course it has its risks. But maybe for the purpose of this discussion, we'll just zero in on your listed companies. So on the listed market, the biggest or the biggest advantage that you get is that of liquidity. You have good returns and you can liquidate stocks much faster than you can do property and private equity. If you need money right now and you are holding on to shares, you go to your stockbroker, you sell them, and you are able to get your cash within 3 or 4 days, depending on how the market is doing at that particular time. So I would say that is really the major difference. But in terms of performance, the property, equities, private equity, we classify all those as your real assets because they all are able to track inflation. They give inflation tracking returns. And in terms of liquidity, your equities are the best in terms of liquidity because you are able to unwind your position at the quickest time than your property and private equity. It seems Patrick has deserted me.
No, I'm here. I'm here. Hi, Chengetai, can you hear me?
Yes, I can.
I'm actually here. Sorry about that. I missed the last part of your contribution. Had you finished answering?
Yes. So I was saying, in comparing the equities market with the other markets, the advantage for equities is in liquidity because you are able to unwind your position within a week. But if you consider one who is invested in a property or in private equity, it takes you a bit of time. But I'm sure when you held a discussion with Darlington on property, he talked about ways of trying to improve the liquidity of property, unitizing the property and so on, which is a discussion that I'm sure you already had with Darlington. But in terms of liquidity, yes, the equities market is probably offers more better opportunities.
Okay. Now, I know you've spoken about the returns on the equities market, but I just wanted to know what the worst case scenario could be in terms of equities investment. Is there ever a situation where an investor can lose their entire investment when they put their money in shares?
Right. So share prices determined by what is happening in the general economy, and then what is happening in the company-specific issues relating to the company that you are invested in. And if a company is doing well, which we all want to happen to our investments, we all want the company that we're invested in to do well, and which will result in the value of that company going up and the share price going up, and also my wealth going up and so on. But there are also instances where you invest in a company and things don't really turn out as well as you want them to. And that company might now report some poor financial performance, which means the share price can come down. So what is happening to the value of your portfolio is that you have lost out because the share price has gone down. Then the worst case scenario is having a company closing down. So as the company closes down, it means what you are going to reap out of that company at the end of the day could be close to nothing, if ever you are going to get something. We have had such cases of companies that have gone into judicial management, into curatorship and so on. That has happened on our stock exchange. So it's not something that is quite new, but I'm just talking about the worst case scenario, that it's possible to lose your money, part of it, or even to lose all of it. That is why, like I've said earlier on, it is important to have your financial advisor helping you out in as far as where to put your money and so on.
Thanks for that, Chenge. One of the things that we normally hear also when it comes to investing on the stock market is that one of the most important rules rather is that you should never invest money that you cannot afford to lose. But what questions should one considering investing in the stock market ask themselves before they actually make an investment? I know we're already saying that don't invest anything that you can't lose or are not willing to take the risk in terms of losing that amount of money that you're putting on. But what are the questions can one ask themselves if they are looking at investing on the stock market?
So the first question is, how much money do you have? Because how much money you have tells you about the product that you are going to get on the stock exchange. We have so many products. You can go into the equities market via unit trusts, managed portfolios, and so on. So how much money you have will determine the product that you are going to get on this stock exchange. Then the other issue is to look at the time horizon. How much money, how much time can I have? Can I set this money aside and will not require any of it? So you will need to look at the time that you have to invest that money. Then there are other considerations that we have to look at, which is the legal environment, the liquidity of that particular stock that you are invested in, and so on. Those are some of the key considerations. But most of all, you also look at your risk tolerance, which will speak to the companies that you can invest in or that you can comfortably invest in. But like I indicated, the equities market has so many products that you can invest in. But it depends on what you are looking at in terms of the money, the time, the taxes, the legal environment, the product, and so on.
Okay. Now, also the other reason why I take it most people would want to invest in the first place is because they'd want to either preserve the value of their capital or to increase it. And I know you mentioned it briefly, but what are the factors that really determine the movement in the share prices on the stock market? I know in other cases we'll talk about factors like demand and supply. Do these also apply to investing on the ZSE? What are the main factors that drive prices of stocks?
So the stock market is a market. And in a market, forces of demand and supply always come into being. And this is what now determines the share price. So I talked earlier on. Hello, Patrick?
Yes, I can hear you.
Oh, yeah. So something is happening to my. So I talked earlier on about the issue of the company that you are invested in. Hello, Patrick?
Yes, I can hear you, Chenge. We're together.
Oh, yeah. My laptop is playing up. Yeah. So what determines the share price is
okay, now I seem to have lost you. You're frozen on my side. I'll just give you a minute or two to come back. Okay, if I'm still audible on our Facebook platform and the viewers are still watching, I just need you to know that we are going to give time to Chenge to answer the questions that you're asking. I'm taking note of them. I did see a question from Willard, who's not with us today, but he spoke about whether trust can be listed on the ZSE. As soon as we get Chenge back, I'll get him to answer that question. Then Makanani also asked about the Victoria Falls Stock Exchange. I had that question prepared for Chenge. He's going to be answering it as well. And then Kevin, you're asking, how does delisting of companies from the ZSE affect net asset value of equities held by Old Mutual? Okay, I'll just forward that question to Chenge as well, and just see if we can answer it for us on this in this conversation today. I'm just waiting for him to come back. He seems to be having laptop challenges. It's not new to him. It's not unique rather to him alone. I seem to be having problems as well, but not with my laptop. It's probably the network on my side. So we'll just allow Chenge to log back in and join us for the conversation. Don, I see your question also. You're asking if we can now deposit in the unit trust accounts. I'm sure Chenge will answer that as well as soon as he gets back. So just keep the questions coming in, and we'll give Chenge time to answer the questions when he comes back online. So thank you so much for following. Sparticio, you're asking if there's a minimum amount of investment in the stock exchange. I'm taking note of that. My Zambezian, Tristan, can one deposit using Nostro account? Deposit, I take it you're talking about making a deposit into an equities account for purchasing of shares on the ZSE, and you need to know if you can deposit into a Nostro account. Okay. Shuvai, you're saying you're waiting. Please bear with us. My apologies for what's currently taking place. These failures do occur, and the systems are failing us today. But it did look like it was going to be a very interesting conversation with Chenge. And there were amazing insights that he was already sharing with us. So please do keep your questions coming, and we'll do everything to address them. I think he's coming back online now. Hi, Chenge. Glad to have you back. I see you're still on mute.
Yeah, thanks, Patrick. I've had to change devices. I think something was happening to my laptop.
You know, you and I both, man. I don't know what's going on with these devices today. I was using my laptop earlier. It also failed me. I had to then move to my phone. And now phone calls just keep coming in and it's interfering with the conversation. But I'm glad that we still have viewers and they've been asking a couple of questions. So I'll just allow you to finish off your previous response before I just throw some of the questions at you that those that are following us on Facebook have been asking.
I'm not quite sure where exactly I got cut off, but I was talking about, I think we're talking about what determines the share price of a company. And
Yes.
what determines the share price is mainly to do with the prospects of the company that one is invested in. If the company is likely to do well, which is now determined by the strategy that the company is taking as a result of the management in that company, and the company can do well because of a certain product that they are pushing, which is doing well and is likely to report higher profits. So if a company is likely to report higher profits, it means that the value of that company is likely to go up when whatever is happening now happens in the future. So the value of that company is likely to go up. And at the same time, if it's going to report higher profitability, it also means that the dividends that the company is going to declare are likely to be higher. So in that scenario, you will have investors looking for shares for that particular company because they are saying this company is likely to do well. So you go to a market, there are more buyers than sellers. So when you have more buyers than sellers, the sellers end up maybe asking for a higher price for you to get their shares, and the share price goes up. Similarly, if a company is not doing well, I was giving an example of, say, a tobacco company that is supplying probably 30 to 40% of their product to a company X. And then that company X bans the use of tobacco in that particular country. It means this company has lost 30 or 40% of their market. It's now up to them to look for a new market. And in that particular case, that company is likely to not to do well because they've lost a market and profitability is likely to come down. So in that particular case, we now have people wanting to sell their shares because the company is not doing well. And more sellers means the share price comes down. More buyers, the price goes up. That is really what determines the share price.
Okay. Before we just go onto our Facebook platform and take questions from there, you're still dealing with the issue to do with share prices. And there's just one more thing that I wanted to find out. You know, in layman's language, it's not uncommon to hear people talking about a particular shares being cheap or expensive. But in other more informed circles, you'll hear people talk about a particular share being undervalued or overvalued. So what's the difference between the two and how do you correctly describe the value of the share?
So, like I said previously, that people look at the share price is related to the company's earnings, which is, in simple terms, your profitability into the future. So these financial advisors that you go to for advice have a way of determining that relationship to say if a company is expected to produce so much earnings, then the price is expected to be so much. And you will often hear people talk about the price to earnings ratio or something like that. They are just looking at trying to determine what the future earnings of that company is going to be, which then determines the price today. And once I have said company X is valued at $4 based on what I'm seeing happening within that company, then that becomes the fair value of the share fair value for that particular company. So if that particular company is trading at $3, I would say that company is undervalued, or that company or the share price is cheap, because it's trading less than my projected fair value for that particular company. So for the same company, which I have done my valuation, and I've said the valuation is $4, but it's trading at $6, I would say that company is expensive, or the shares of that company are expensive or overvalued, because I have my own valuation for that company. I have attached a certain price to that company. Now I go to the market and say, what is the market saying about this company? Which now determines whether it's expensive or cheap. But otherwise, you can't just look at the market and say, this company is going for 20. Let's say you're talking about Delta. You say Delta is 1490. The basis for saying it's cheap or expensive is because you have your own evaluation for that particular company to then determine whether the $14 at which it's trading is expensive or cheap.
I think that's a very interesting response, and very detailed as well. But what I also then get from it is that it's not a calculation that the layperson can probably just do at home without consulting a financial advisor. So for anyone that's looking to invest at the stock market, it's best to get advice from the experts who already know how to do these evaluations and already have tools on how best to do those evaluations. Now, I just need to move over to our Facebook platform, and I hope you're prepared to answer some of these questions, because they are quite interesting. And when I read through some of them, it looks like these are people who are well versed with what's taking place on the stock market. So I'll just start from one of the earlier questions that came up. I think this came from Willard, and he was asking to say, can a trust be listed on the ZSE? You spoke about the public limited companies where people will just go and list on the ZSE in order to raise capital, you know, from the sale of their shares. But then he was also asking to then say, can a trust be listed on the ZSE?
Yeah, now that's a difficult one. Yeah, because the area of trust is not an area that I'm well versed with, but my thinking is that a trust can be listed. The reason why I'm saying this is that you have your exchange traded funds, which are ETFs. I know in Zim we don't have ETFs, but I can, because of something that is happening in the background, I'm very, very sure that we are going to have one ETF very soon coming to the market. So an ETF is established by way of a trust. So an ETF is established by way of a trust deed, and then that ETF is listed on the stock exchange. That's why it's then called an exchange traded fund, which is an exchange which is established by way of a trust. But like I indicated, the area of trust, I know there are so many trusts that can be established from a legal perspective. I wouldn't be sure if every trust can be listed, but what I know for sure is some of the trusts can be listed, especially on the basis of an ETF, which is born from a trust deed.
You know, Chengetai, thank you for that. I think you answered it quite well, and I'm going to caution Willard also, because I know him, and he's a serial entrepreneur fond of breaking the rules. So if you start asking about listing trusts, it's not the norm, and you can expect such a question from him. Willard, if you're listening, you're cautioned. I also have a question here that comes from Kevin. And Kevin is asking to say, how does delisting of companies from the ZSE affect net asset value of equities held by Old Mutual? That's one of them. Yeah. Okay, you got the question?
Come again.
He says, how does delisting of companies from the ZSE affect net asset value of equities held by Old Mutual?
Yeah. I'm not quite sure I get the question whether this is relating to Old Mutual as holding in certain assets which have then been delisted and are being reported as the value coming down. I'm not quite sure where this is coming through. But what I got from the listener is that we are looking at a delisted company. Now, when a company is delisted, it depends on the reason for delisting. It can be that the delisting is because the owners feel they're not getting so much value from the stock exchange, and hence they need to delist from that stock exchange. And in that case, it means nothing much has really happened to the company, except they've just chosen not to delist. Nothing much has happened to the company. I'm sure there are a number of transactions that are happening on the stock exchange now, where some companies have been delisted or are going to be delisted in the short time to come. So in that particular case, the company itself doesn't really, nothing much has happened to the management, to the product, to the prospects of that company. What has changed is the valuation of that company. Whereas previously, that company was valued based on what the market views are about that company. Now, it's now private. So in terms of the valuation, the valuation method now differs. So I didn't really get the where he's talking about the reduced net asset value and so on. I didn't get that part of the question, but it depends on why the company has been delisted. There are some companies that have been delisted because they are not doing well, or they've gone into judicial management, or they've gone into curatorship and so on. Then when you are delisted for those reasons, then the value of your company will come down because you are no longer trading because you have done some mischief or you have done something that is probably not acceptable to the market. So I'm not sure if I've answered correctly what this listener wanted, but that was my understanding on the issue of our delisting.
Okay, I think you responded well to it, but I'll just ask Kevin if he's still online and following the conversation to clarify the question if you're still with us. But if you're answered, also just show by a thumbs up to let us know that you're well answered on the question. Then I also have a question here from Patisiwe. I'm not sure if you had spoken about it earlier. I know you did speak about the minimum amounts that could be invested on the stock exchange, but that's what the question is asking, to say what's the minimum, if any, that one can invest when they want to buy shares on the stock exchange?
Earlier on, I talked about the different products that we have on the stock on investing in equity investments. You can the easiest way would be to go via the unity trust, where under a unity trust scheme, your funds are collected together with other possible investors. You create a bigger pool, which is then managed by an asset manager or a professional who is into asset management. So in that particular case, the minimum investment is very low. I know with as little as $100, you can get access to equity markets through your unity trust. But if you decide to go via, if you want to go direct to stockbrokers, I'm not quite sure what the minimum is, but it could be probably something like 5,000 or so. But I'm not quite sure about the stockbrokers. Then, if you want to create your own managed portfolio, if you were to come to an asset manager like ourselves and say, I have so much, I want you to create a portfolio for me, then we are looking at an amount of, say, 500,000 or more. So there's no reason, Patrick, for someone to say, I have no access to the equity markets because I don't have the money. With as little as $100, you can go into a unity trust. If you feel a unity trust is too small for you, go direct to a stockbroker. If you feel I can't deal with a broker, I want to deal with an asset manager, come to us with your 500,000, 1 million. We'll create a portfolio for you. So the different products allow all investors to be part of the equity market investments, no matter how much we have.
Okay, there's also another question here. Thank you for that, though, from Chigs. And he's asking, are you now accepting USD? There's another question that also spoke from my Zambezian, who was also asking to say, can we now deposit using a Nostro account? But as you respond to that also, I guess you can also then deal with the Victoria Falls Stock Exchange issue that was asked by another viewer. I think they just wanted to understand what's taking place with the Victoria Falls Stock Exchange. Are they trading and what are the requirements? Then I think they all have to do with the investments in US dollars, I guess.
Yeah. So the big question of USD investments have been answered by the Victoria Falls Stock Exchange, which was launched last week on Friday. And the main difference between the Zimbabwe Stock Exchange and the Victoria Falls Stock Exchange is that the Victoria Falls Stock Exchange trades in USD. So if you have US dollars and you want to participate on an exchange, then the Victoria Falls Stock Exchange is good for you. In terms of trading, at the moment there haven't been any trades that have happened. I think you understand, Patrick, that this is a new market, and obviously any new market is expected to have some teething problems at the beginning. But we understand that everything is now ready for that market to kick off. There is one counter that has been listed there, which is Zvobgo International. So what this means is anyone who bought Zvobgo International shares on the Zimbabwe Stock Exchange, if you want to sell those shares, you have to sell them via the Victoria Stock Exchange, and you get your money in Nostro. So for those who have Nostro, we have US dollars and who want to participate with the Zimbabwe Stock Exchange, then I can safely say there is a market that is there for USD deposits.
Yeah, thank you for that. I hope the questions are answered to those that asked the questions to do with Nostro and the Victoria Falls Stock Exchange. You're doing quite well, Chenge. And there's a question that Albert is asking now to say, do we have any circuit breaker mechanisms on the local exchange in the event of a wild run on a particular stock?
Thank you for that. I would have loved to know which Albert is that, because I have a friend who was promising me that I'll be there and I'll be firing you with questions. But the question on circuit breakers is that yes, we do have circuit breakers. So what Albert is saying is we have cases where there is that run, like what happened in May, June, where the stock market was going up by 14-15% on a daily basis. There are circuit breakers to say there's a limit to which a counter can go up, and also a limit to which they can go down. Currently, the circuit breaker on the Zimbabwe Stock Exchange is 20%. And that 20%, what it means is, like I said earlier on, if a company, the prospects of a company are going down, and there is pressure to sell, or people have information that this company is likely to close, or this bank is having problems with the authorities and something like that, you will find that there will be selling pressure. Everyone wants to exit the market. Instead of having a complete crash in one day, the market or the authorities that govern these markets are saying that share price can only go down by 20% on a daily basis. So that this is where the circuit breaker comes through. There is indeed a circuit breaker.
Thank you for that. I hope you answered Albert. I'm not sure if you are the Albert that Chenge was talking about, but I hope that answers your question. Then I've got Bernard also, who's asking to say, does Old Mutual Equity Fund only bring value from price appreciation, or you also have to get dividend distributions that show on your income distribution statement? I'm not sure if the question is clear, but he's referring to the Old Mutual Equity Fund to say, does the value only come from the price appreciation of the stocks, or are the dividends involved as well?
Yeah. So for equity, for unit trust funds, you will notice that the dividends are not really sent out to you like someone who is invested in a stock would expect to get a dividend. So if you are buying an individual stock, your delta, and it declares a dividend, that dividend comes into your bank account. But with unity trust now, it's a bit different in that dividend is reinvested in the portfolio, and then you have your redistribution that is talking about. But the dividend is not parceled out to unit holders, but it's catered for within the fund.
Thank you for that. Thank you for that. Bernard, I hope you are answered in that question. Then I also have I've got a lot of questions for you. I haven't even finished my own questions, but let's deal with the viewers' questions. I've got a question from Kutsai MTC, who's asking to say, is there a possibility that the old mutual equity fund growth rate beats the ZSE? Or the best you could do is to check the ZSE?
It is possible to beat the ZSE, and it is our desire to beat the ZSE. Yes, I think for 2020, our fund has been lagging the ZSE. But if you look at previous performances, we've done quite well. Obviously, when you are going into the equities market, whether you are going there as an individual or you are going there as a unit trust or you are going there as a managed fund, one of the things that we always encourage an investor to do is to create a benchmark. So once you have created a benchmark, what you want to do is to either track that benchmark or to outperform it. So it's the same thing with our unit trust. Our desire is we set a benchmark, and for the benchmark, because we are wholly invested in the Zimbabwe Stock Exchange, the benchmark is the all-share index. So our desire is to track the all-share index or to beat the all-share index. If we are tracking it, to us, we are doing fine. If we beat it, we are doing well. But there are also instances where sometimes you find yourself under the portfolio, under the benchmark, and as an asset manager, you then have to show your expertise in trying to turn around that portfolio and ensure that it's on the right path.
Okay, thank you for that, Chenge. Now we seem to be running out of time, and we have a lot of questions that are coming up on our Facebook platform. So, Chenge, I'll just advise that after we're done with the interview, if you could just check for the questions and probably just respond to them, so that our viewers get responses. But I'll just take one last question. Well, there are two of the same nature, one from Willard and the other from Kutsai. No, it's actually Makanani, who's asking to say, do you have an app for buying unit trust? And Willard also asked the same question to say, can we buy shares from the comfort of our own homes, or do we need to actually come to the office to deal with the brokers themselves? So I think it's just in relation to the current situation that we're going through now, that being of COVID and the lockdowns. So do people have to come through to the office to meet up with the brokers or the fund managers, or do we have an app that people can transact on?
So, yes, maybe I'm not sure. I do not have access to the Facebook platform right now, Patrick. But
okay.
maybe if depending on the number of questions that we get, we can probably schedule maybe another discussion, depending on the what will have come out of the questions that we are seeing. So it's possible to have another discussion, probably mid-November, end of November, or so on, just to make sure that everyone is answered. Like I indicated at the beginning, Patrick, it is my desire to inspire one or two people to participate and also get to understand this equities business much earlier than most of us did, where we only were exposed to a share certificate. It's attachment. We were attached to a stockbroker or an asset management firm, but otherwise in our life we didn't know anything about shares. But going back to the question to say, how can we trade? If we are looking at the unit trust funds, in our case, the interest funds, we have put up mechanisms for someone to transact from home. If you look at our social media platforms, there are contacts for people who you can talk to in order to inform them that we have added an investment. But for those who want to transact direct on the Zimbabwe Stock Exchange, you can do so. There are currently 2 platforms: the C-Trade platform and the recently launched ZSE Direct, which was launched by ZSE for those who want to transact on the equities market direct without the involvement of a broker or anyone. So those platforms are there. But what I was talking about is for those who are in the equities market, the old mutual equity fund and so on. If you want to add your investments, you don't necessarily need to come to our offices. There are mechanisms for you to do that. You inform our team, and that investment will be taken on board.
Okay. Thank you for that. Now, as we draw to the close, because our time is now moving fast, actually, I just wanted to know something. Because growing up, personally, I used to hate the main news at 8. And the specific slot that I hated was that of the stock market update in the business section of the news. Because you'd hear terms like, counters that rose and counters that fell, a gain in the industrial index, a decline in the industrial index. And what does this all mean in terms of your portfolio performance? How can one tell that their portfolio is doing well?
We are in the same boat, Patrick. I remember for some of us, just 5 minutes before the main news, you would find the Standard Chartered financial highlights, and they talk about stocks going up, indices, and so on. To us, it was like that's the time you would go up and look for some water and so on, because we didn't understand what was happening. So what's really happening with indices is that I talked earlier on about setting a benchmark when you are investing. So the indices give you the direction of the market, the collective direction of the market. So there are so many indices. For instance, the all-share index. The all-share index gives you the general direction of the whole stock market. Within the 53 counters, there could be 10 counters going up, 15 counters going down, the rest unchanged. But at the end of the day, we say the index has gone up, because we are saying generally, looking at the whole market, it has gone up by 0.5. This is the weighted average of the whole market. You also have the top 10 index, which looks at the top 10 counters by market capitalization. It's an index that speaks to that particular sector. We have the medium cap index and so on. So in general, the index speaks to a weighted return on a whole portfolio or in a group of counters that have been put in a particular sector. So instead of you, Patrick, saying how did the market, when you ask, you say, how did the market today? And instead of someone to say Delta was up, company X was down, company Y was up, and so on, they'll just give you a general view to say the index was 1% up. That then gives you a general, within that 1%, you then look at the specific counters to say, what about this particular counter? How did it do? This particular counter, how did it do? But generally, we're saying the market was up.
Okay. I think that sums it up. It really sheds more light on how one can begin to understand the indices. So yeah, our time really has gone by, and I think it's Sam that posted a comment to say that we really need more of this. We need to have you back. So yeah, he says this discussion is brilliant and we need to have another one. And I concur, because some of the things that you're bringing up really need more clarity. We spoke about the indices now, how they function. We talk about the counters that trade up and those that trade down, and we need to get more understanding on this. So I think it's important that we actually do schedule another conversation. But what would be your parting words now to our viewers that are following us on Facebook or social media platforms? What advice would you give to people either on the ZSE or the Victoria Falls Stock Exchange that has recently been established? What are your parting words for them?
So my parting words, Patrick, would be to those who are not yet playing in the equity investments market, there's no better time to start than now. If you are not yet in there, there's no better time to start than now. Because one thing about equity investments is money needs time to grow. You better start off now. The earlier you start, the better. Because if we were to start looking at the equity investments at a young age, it means you give your money enough time for it to work wonders for you. So my parting words, Patrick, is for those who are not in the equities investments market, start now. For those who are in there, be patient. These are markets, they have their ups and downs, but at the end of the day, you will most likely be smiling.
Okay, thank you for that, Chenge. There are lots of interesting questions coming up here. I hope we can attend to them. But to our viewers that still need to have their questions answered, if you could just kindly send an email to unittrust@oldmutual.co.zw, or you could call in on the toll-free number 433 during working hours. And then you can also just reach out on our WhatsApp numbers, which are 0719 433 433 or 0777 455 455. Those are the numbers that you could reach out through. They are also there in the comment section of this chat, so you can just look and verify if you got the numbers. But I think this brings to an end our conversation today with Chenge, who's in our investment group as a fund manager. And I'd like to thank you, Chenge, for joining us today. Obviously, there are many unanswered questions that we still need to deal with. So I'll be looking forward to the next time that we actually get to have another conversation. So, and those of us that are watching us on Facebook, I'd like to thank you for joining us. And just to keep tuned in these money conversations that we continue to have as Old Mutual. So up until the next conversation that we have, stay safe in these trying times that we're going through, particularly now, with COVID and the relaxing of, the deadlines, the curfews, the opening up of the border. Just encourage people to continue being safe and exercising caution. We don't stop sanitizing our hands, and we don't stop wearing the face mask. But for all the other financial related issues, it's not the Ministry of Health that we're going to, but it's Old Mutual. So we encourage you to join us and keep following us on our platforms for these important and life-changing conversations. Up until we meet again, thank you, and invest wisely.